issues, and they will not stick to basically the risk rules. They will not stick to the rules of the system, and it'll be extremely difficult for them to actually adopt profitable trading habits. So I would have to say, no, not everyone can. My hope is that everyone can, but my belief is, if you really look at it truthfully, there are some people that they won't buckle down and they won't follow the rules that will lead to profits. So yeah, what do you think? What do you say?
Yeah, that is a tough one.
Tricky.
Yeah,
it's tricky.
I think if you take it with the caveat of the person has a normal functioning brain or normal cognitive abilities, whatever normal is, I believe that everybody can, but not everybody has the desire nor the perseverance. And like you said, some people have these demons, right? Like these addictions, these whatever they're working on. And I think that if you can overcome those things, I think then you can become a trader for sure. But I think, yeah, they really hold you back. But so ultimately, I think if you can overcome everything and you have enough, you stick to it long enough, you have enough will, you really want this. And I think most people can make it happen. But yeah, not everyone, I think, can become a trader, and nor should everybody, want to become a trader, because maybe you're better at basket weaving or, something else. So I think you should do whatever feels good to you. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, and it's like a lot of things in life. You'll know, who your friends are, who the people are that you get along with, and the people, you almost know immediately whether or not you'll want to see, if you meet someone at a party or something, you'll know, oh, that, she's pretty cool or he's pretty cool, and I wouldn't mind hanging out with him or whatever. And it's the same thing with trading. After a while, you'll figure out okay, this just isn't me. Maybe I should go sell adult toys on Amazon or whatever. Maybe this is not my path to, you know what I mean? This is not my way to do it. What I found is that a lot of people who are attracted to trading, they kind of like the idea of the markets and they like the idea of trading, and they get into it. There are some people who are attracted to trading just like they were attracted to selling stuff on Amazon, or, just like they were attracted to flipping houses or selling Herbalife or whatever. It's just kind of another vehicle. Mm-hmm. And that's cool too. But I feel like those people, and I don't have any data to support this, but I just have a sense that they're more likely to give up. They're not the type of person that would stick with it. That's just my intuition. I don't know if that's actually true. I don't know.
I think there's two sides to that. You could also say that they're just trying different things out, and then they, settle on the one that maybe works for them or whatever. But I'm kind of with you too. I've seen more people jump from thing to thing to thing, and then just finally give up and go to their job. So I think totally. Yeah. You get those people, I run into those people, they're like, oh, I'm going to be a blogger, and then you see them again, oh, I'm going to do Amazon, or, oh, I'm going to do no money down housing, or I'm going to rent out Airbnbs, or, there's all these things, and they're like, oh, I'm going to do, whatever it is. Oh, I'm going to try Forex robots now. Okay. Now I'm going to, do options. Now I'm going to, and you're just like, okay, cool. They're trying it out. Yeah, maybe that's what's going on. They're trying to, I did that when I was younger. I was I was really interested in religions. And I'm like, okay, I've only been exposed to a really limited amount, in terms of the world religions, in the way I was growing up. So I was when I went to university, I studied religions. I got a minor degree in religions, because I was like, okay, what is Hinduism? What is Buddhism? What is Zoroastrianism? What is all this stuff? You know what I mean? Mm-hmm. And it was really cool, to figure it out, because I was in that stage. And I think people get that way too. Society in a way kind of encourages us to not necessarily settle on an occupation. Yeah. And, that was different, I think, for our grandparents, mm-hmm. where they were almost born into a thing. They kind of knew, based on their family, what their family did, what they were going to end up doing. Working on the farm, both my grandparents, they were born on a farm, working on a farm, that was their thing. And so, so I think today we have a lot of flexibility in terms of finding what our occupation. And they even tell you in college. I remember in college they said to my mom, son or daughter is probably not going to get a job in his or her degree.
You know, they also told her that it was going to take 6 years to graduate, which I think is like setting them up for, you got to keep paying, you know, you got to keep paying. Yeah. Which wasn't true. It took me 2.5 years to get out, but they said it was going to be 6. So, you know what I mean? It's funny how they do that, like kind of set the expectations. And so I think in a lot of ways, because there's so much information available to us, we get to try different things out and see and taste it and see if, okay, this is for me or this isn't. And so in that way, it's pretty cool. I think it's cool that more people are trying trading. And from a selfish point of view, we use those newbies, like those are the people that we get our profits from. The newbies coming into the system who don't know what they're doing, we can, like, those are the easy prey, right? Like that's how we can pull our profits out as retail traders from that group. That's where we're getting our money from. So, and they learn a lesson. You know, you either learn your lesson and get better at this, or you move on to the next thing. So
yeah, it sounds a little harsh, but like it's kind of like a fraternity or whatever. Like if you can overcome the initiation, then you're in, right? And it's similar thing in most any profession.
Yeah, like sports. Think about sports. I was thinking about this. All the kids, the 6-year-old kids that play soccer, and then how many people are playing soccer at age 26? You know, it just totally filters it out.
Yeah,
it's like that in everything. You're absolutely right. Everything in life, you know, in the end, the cream rises to the top, and that's it. That's just the way it,
So just find the place where you're the cream, right? I guess.
Exactly. Yeah. Where that is the take-home message. Find out where you're the cream, and then go for it, and then rise. Yeah, that's right.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. I personally don't think there is such a thing as ADD. Like, I think it's just a ploy to sell more drugs.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about this concept of ADD? And, you know, some people say, oh, ADD is getting in the way of me trading successfully. What do you think of that?
That's an interesting idea. Here in the spaceship, we have no place for ADD. Everyone has to know their place, and everyone
you can't go off anywhere.
Everyone else. No, we will all die. Yeah, that's right. So ADD, you know what's interesting about that, Hugh? And I had this professor in graduate school who was talking about how his idea was that ADD was this construct that we have, and it's kind of like a new idea. And like in the past, he was very evolutionary, sort of biological. You know, that was his sort of his bent on psychology. Mm-hmm. And he was saying that those guys would have been in the past the lead hunters, the king of the tribe, the one that got the most crocodiles, you know, from the river, you know, that sort of thing. The ADD guys, because they were always. And he said that what's happening is we're creating a new environment for people, like the classroom. We're supposed to sit still, look up, pay attention, listen to the teacher, all that sort of stuff. And so it was like we had these hunter-gatherer bodies that were kind of put into this new situation. So in other words, the diagnosis is the problem. The ADD diagnosis is the problem. So, okay, so the next step is, what about trading? All right, so here's what I think about this. You can construct a situation where your ADD is mitigated, and you can also channel it. So if you have like a checklist and you go, okay, I have to have all these things lined up for me to take a trade with this system, and you have someone every week this is okay, let's see which trades you took. Show me your checklist, show me what happened, show me why you took the trade, why you didn't, whatever. Why did you risk this much or whatever, right? So you have checks and balances. You have a list of things you know you should do for every trade, and then you have someone that's going to look over it every week and say, well, did you do what you said you were going to do, right? And then the other thing is, if you really have a lot of ideas percolating, why not just channel those into your system building, right? I think that's the level, like the creative output for traders can be in system building and coming up with ideas and looking at different things and how can you use those ideas that you have, you know, to take trades. So I really think that you should separate it. So you should become very regimented in the way that you trade and the way that you keep your records and the way that you score yourself on your trades. And then you can become more creative in the way that you kind of create strategies and come up with things to test. So to me, that's the key.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And if you even need to have a small money account where you actually take live trades on your creative ideas, you can even try that. Just, again, try and keep them in records so you know which ideas are working for you and which aren't, right? So kind of, track that and tag that. So yeah, that's what I would say. What are your thoughts on that?
Yeah, I personally don't think there is such a thing as ADD. Like, I think it's just a ploy to sell more drugs. And like you said, I think it is those people who are the movers, and they need to be kinesthetic, and they were the hunters back in the day, right? Yeah, I think that the education system just is not built for them. Like you said, it's not tailored to that type of learning, and they're geniuses in other ways, but they aren't like book learning geniuses. I think on top of what you said, that's a good thing to go through also. But I think maybe consider, if you're that type, consider like day trading, right? Just day trading for maybe like an hour a day. And that kind of fulfills your need to like flip between different pairs, and you're kind of like on the hunt. And then you just spend that 1 hour of disciplined trading, and then you can go on and do something else with the rest of your day. So that's another thing that I think could help that type of personality. But yeah, the bottom line is I don't think there is such a thing as ADD. I think it's just a different learning style.
Yeah, and you just need to constrain your different areas, because going off the reservation when it comes to trading can really hurt. Like, that's a bad thing. And I inevitably I get these questions from traders where they say, "Have you ever just taken trades like based on where you think the market's going to go?" And I'm like, no. Maybe when I first started trading, we did that. Like, I remember my roommate, when I was trading, he was like, "Oh no, oil's going up, man. Oil's going up," and all this stuff like that. And I was like, well, how do I, like, where's the stop loss? You know what I mean? Like, what, yeah. Like, yeah, that sort of thing. And, so I think if you keep it in the, like, if you keep it penned up, it's the way to go, right? Like, in the right area.
Parameters.
Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Of course, I screwed it up, because when I was trading it live, I would take profit too early.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right. So in the last episode, we talked about a little bit about creativity when developing trading strategies. What are some ways that you found to, start getting new ideas for trading strategies, and just getting creative with things that maybe aren't out there or you haven't found?
There's some really cool tests in psychology where they say like what are, like, can you come up with 30 things that you can do with a paperclip, or things like that. And there was a book, I can put it in the show notes for people that are interested, called Thinker Toys, and it's about this guy who kind of like consults with companies and tries to help people to learn to think out of the box and stuff like that. I think his heyday was in the 90s. I don't know if he's around anymore, but one of the things I took away from that was taking something that everybody sees in one way and then using it in a different way, right? So like paper clips, like when I was a kid, I could open a pair of handcuffs with a paper clip, right? My stepdad, he was like a volunteer police officer. So I had not only, when I was a kid, I was a magician, and so I did like escape tricks and stuff like that. Jump off the roof into the pool with some handcuffs and try to get out in the deep end. Hopefully, get out of that, and then, I thought I was Houdini. And then when he started volunteering on the weekends as a cop, I was like, sweet, now I've got real handcuffs. You know what I mean? I don't have like the toy ones. So I learned all these different ways to do that. And I think in trading, you can do the same thing where you go, okay, what is a moving average? All right, a moving average is used by most people to determine the direction of the trend or the market, right? Okay, what are other ways you can use moving average? Oh, you could use it as support and resistance. You could use it as an exit tool. You could use it as an entry tool, right? You could use it lots of different ways. And so that's one thing to think about is what does everyone use? Like the biggest mind blower for me was when this was back in 2003, I learned the stochastic pop.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Stochastic pop, I will put the link in the show notes, from a book called The Complete Trader, but he spelled complete weird as P-L-E-A-T, Complete Trader. I don't know if that's like an oldie. Yeah. Anyway, the guy was interesting because he was like, when we were trading stochastics, we would wait till it to go over 80 and sell and wait for it to get back down under 20 and buy, right? Or get under 20 and then go back up over 20, right? And then buy, or go over 80 and then come back down below 80 and then sell. Or 30, 70, it depends on, whatever, people have different levels. But he was saying, Jake Bernstein, that's right, Jake Bernstein. He was saying when it got up to 80, buy. Mm-hmm. And I was like, mind blower, you know what I mean? Like, I was like, wow, because I was like contrarian by nature, and I was like, ooh, that's interesting. And so I started testing. I'm like, holy crap, it actually worked. His point was that usually when the market got over 80, that wasn't the end of the move. There was still a bit of a pop there. Mm-hmm. And so you're trying to get that little move higher, right? And sometimes, of course, it would keep trending, but usually you just got a nice big move up there. So you weren't buying when it went over 80 and crossing back down. You would actually just wait till it got over 80 and then you were buying. And the same thing when it got...
small profit target, right, if I remember?
Yeah, it was pretty quick. Yeah, it was a quick thing, yeah. And so, of course, I screwed it up because when I was trading it live, I would take profit too early. And then I was beating myself up going, what am I doing? And every time I go, oh, look, it was perfect if I just stuck to the rules, So I was still learning, not to take profits early, which is something really hard to learn, I think, when you first start. So that's what I would encourage you to do. Take the tools that everyone else is using and use them in a different way. Like use that hammer to eat ice cream, right? Use that moving average to do something that no one else is doing. Use that stochastic in a different way. Like, here's another one that I learned. Point and figure charts. Like a point and figure chart is like it has an X if it goes up 50 pips. If it doesn't go up more than 50 pips, or whatever the number for the box is, it could be 100 pips, 20 pips, whatever. But I used to hand draw these euro and pound charts on point and figure. And you know what I did with it? Then I made moving averages on the point and figure chart, and you could use moving average crosses on the point and figure chart. Totally different to what anyone else is doing, and actually a really good way of seeing the trend. And you don't get these little whipsaws that you get on normal price charts, which are normal time-based candles instead of movement-based candles, which is what point and figure are. So I would just encourage you to look at things in a different way. Take a tool that a lot of people use and decide, hey, I'm going to use this in another way. How else could I use this in a way that I've never heard before? And does it work? That's a really cool way, I think. What do you think?
Yeah, no, I agree. I think, like you said, I'm kind of contrarian by nature. So I'm going to figure out, okay, what is the opposite of what's going on here? And does that work? And I think you can also draw some inspiration from other areas, like maybe architecture or design or hip hop or whatever it is, and kind of figure out what those successful people did differently and how they were going against the grain. And you can kind of like figure a different way to do that in trading. That sounds kind of weird, but I think it just gives you more creativity when you do that.
Yeah, I think you're right. I think, I've always thought that looking into harmonics, I feel like there's something in the market charts that maps onto harmonics. I haven't figured out what it is, or you can get into sacred geometry and stuff. There's actually quite a few books on that stuff. But yeah, I do think there are some elements that you could take from other fields, like even physics or whatever, applied the right way could possibly give you an edge. So And it could just be our minds just looking for connections too. Like that could be it too. But who cares if it works, right? If it works, you know what I mean? Yeah.
So what do you think of this idea that if enough people know the trading strategy, it loses its edge?
Yeah, I understand why people are saying that. And I suppose if everyone was using the same robot, that would be the case. The problem is if I give you my rules to my kangaroo tail strategy, and I give them to you, and then we give them to 500 people, and then we say, okay, now go and trade that. And we all trade the same pairs, the yen, the pound, the euro, the Aussie, the Kiwi, the CAD. We come back a year later and we look at our chart, our trades. We have different trades, man. In fact, some of us are going to throw it away 6 months into the year, 3 months into the year, and the others are going to say this is amazing. And so that to me is the real thing about the markets is we're looking at it through our own filter, and what I think is a great kangaroo tail, someone else is going to go, no way would I ever take that, and vice versa. So, and you know, this was really driven home to me by a book by Daryl Guppy, who's a trader. And I read this, you know, back in 2005 or 2004. His books are kind of hard to read, but he was talking about moving averages and how, you know, he would look at the market this way, and he would say you would look at this change in the moving average, and that would suggest that the market's going to go this way. He said, but like, if I tell you this, it doesn't matter because everyone else is going to have their own way of seeing it. And it's so true. It is so true. Like I get questions from traders on our Sunday night webinar, right, that we do. And they're like, what about this kangaroo tail? And they'll tell me the chart, they'll tell me the time frame, and I'll look at it and I'll go, which one, where? Like, I don't see it. Like, you know what I mean? It should be like to me, it would be like an obvious kangaroo tail. If it was, I'd say, no, I don't think, for me, this isn't really because of this, this, and that. You know what I mean? And so, and it never fails. Like, it's so obvious. So I think it is possible. What you're saying is true. If we all have the same software, the problem is we all have different software in our head, and we all seeing it through our own filter. So I don't think, as long as we're still discretionary traders, I just think we're all trading something different, even if we have the same rules. It's crazy. I mean, it's crazy. Like, and it's crazy how people modify it. Like, if you give someone your rules, Hugh, and you say, okay, this is what works, this is what I do, these are my data, this is blah, blah, blah. You give it to someone, I swear to you, you come back a year later, they're going to have slightly different rules, because they're going to say something like, well, Hugh, what I noticed was when this happens, then I have to do this and that. So I've added this rule and I've, you know, modified it. And that's cool. I think that's good, because they're going to, that's good for them. They shouldn't follow exactly what I tell them. They should use their own beliefs in building it. So, but I just don't believe this idea that if everyone, you know, if enough people have the rules, that it stops working, because I just don't think we're all doing the same thing, even if we all have the same rules, which is crazy to say. But
I agree. But and especially you have to think about, like, the retail market is so small in most markets, you know, options, futures, whatever, that I think I don't think you could really move the market. I think the only way that you would really move a market, like you said, is with an automated system traded by some sort of bank or something, or some sort of hedge fund that has like huge volume, right? And I think that's the only way that a system could like play itself out, maybe.
Yes. Yeah, it's difficult to imagine a situation in our life, like where we are right now, where that's possible. Now, what people will sometimes do is they'll point to like the turtle rules and they go, see, it didn't work, you know, from 1998 to 2006. It stopped working. That's because everyone read the market wizards. Everyone started trading the turtle rules, you know, and I don't think that's really true. I think it's just a case of the system went through a terrible stretch. You know, or whatever.
Long drawdown, so you got to be able to.
Yeah, totally, man. And even if you talk to some of the turtles, they'll tell you that they're trading different rules now. You know, they're still trend following, many of them, but they're not trading the same original rules. They've modified them, which is good. That's the whole point of, I think, of trading. So so it's a tricky one, because I understand, and this is, you know, it's kind of like the idea of brokers out to get you. It's this idea of, you know, systems stop working because everyone's, you know, don't share it. Everyone's going to get it, and then it'll ruin it. And the brokers are going to, you know, ruin your account. And, you know, there's a lot of these things that we get as traders that we hear about. So just part of the landscape, I guess.
Yeah. Cool. Great insights. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
I think it's harder to trade really gappy charts. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I got a question from a trader. He's been trading indices and shares for a long time, and he was saying that when he tried to move over to currencies, he found it difficult, and he was wondering, like, why is it that he finds it difficult moving over? And I had some ideas on that, but what were some of your thoughts?
Yeah, I think it's just a different psychology, right? I think Forex and maybe futures kind of have a similar psychology, and then you got stocks, indices, and maybe even options that have a slightly different psychology behind them. And it seems like if you're a stock trader, you can find value going long. You're looking for those companies that are like really undervalued, or they're going to have a new product coming out or something like that, and you can look at the fundamentals and really lean on that. And then for like the penny stocks, if you find like those scam companies and you know that they're no good but they take off, then you can just short them. That's a different psychology behind that compared to like Forex or maybe even futures. What do you think?
Yeah. No, I think probably the biggest thing is what you touched on is like when you look at shares. Okay, so when I started trading in the 90s, we learned from this guy named William J. O'Neill, who wrote a book, How to Make Money Trading Stocks. I think it's something like that. We can put it in the show notes. And he came up with the Investor's Business Daily, which he thought was a more technical based newspaper rather than like the Wall Street Journal, which was kind of like the go-to thing in the States at the time. Other countries have different papers, but so he was talking about earnings per share, relative strength, and things like that. And we would get the charts every week called daily graphs, and they were like these phone books. Like sometimes 5 of them would come every week, and we could pour through them and look at the charts and find out if there's any cup and handle, which is what William J. O'Neill talked about in his book, right?
Yeah.
Anyway, here's the thing. We were only looking for shares to buy. And this is also like in the dot-com bubble too, like from 94 to 99. So we were only looking to buy. There was a really hardcore rising market, especially towards the end of that, like 97, 98. There was a lot going on then. And I remember, buying stocks like Netscape, Gateway 2000, which made computers, all these really like AOL, all these really like darling companies at the time. And when you think about it, a couple of things are interesting about that. Like we were only buying, right? Mm-hmm. So when you're a currency trader, automatically you have to look at things a little bit differently. I would even argue more than it's a little bit different to futures traders, because futures traders, like I remember when oil fell earlier this year in 2020, earlier in 2020, I think it was. I don't think it was late 2019. It was early 2020. Oil fell really hard, and everyone was saying like it was the death of oil. But the thing is, oil does have some intrinsic value. It can't go to like 0 cents. You know what I mean? I suppose a company could. Like if a company is totally bankrupt and they're toast, then yeah, the shares will go really low. But before that, they'll actually delist it. And they'll take it off the major exchange and they'll move it to another. I remember I had a stock. I know this because I had a stock, and I called my broker. There's no internet or anything. And I called my broker. I'm like, what? Like, where's the stock? I can't find the quote like in the paper. And he's like, well, it's gone to I think he called it the note board, or it was something about the board, some sort of board. And I'm like, what's the note board or whatever? He goes, that's where stocks go to die. It's like, awesome. My stock's going to die. But yeah, so I guess the biggest thing is when you're trading Forex, you're always trading one relative to the other. So you can look at the pound Aussie chart, or you can look at the Aussie pound chart. And there are actually some charts that you can find, we can post in the show notes, where you actually, it's the opposite. It's not the Euro USD, it's the USD Euro. It's really kind of hard to wrap your head around that. So inherently, currency pairs are range bound.
Hey there, I hope you're finding this episode useful. I just want to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Now, it doesn't seem like that because we still can trade with leverage in Forex, even though they're trying to take that away from us. There still is a range, a high and a low for the euro, which the euro USD, it's about from, it's been about 77 cents to the euro to about $1.61, I think, around there. So it's basically been caught in that range since the inception of the euro. And every currency pair kind of has that range. So it's a little bit different from, say, gold. Because some people right now, if you talk to them, they'll say gold is going to go to $10,000. Well, it hasn't really been to $10,000 in modern times. We don't have a chart that goes back that shows gold being worth that much. But it could, and it could go to 100,000 or 200,000. Same with Bitcoin and everything else. Whereas with currencies, it's a little, that could certainly happen, but that would mean that one of the currencies is basically in the toilet and is done, and they're going to have to reset that currency, right? So yeah, it does take a little bit of a different approach. You really have to, you almost have to consider twice as many decisions because you're thinking of buying or selling. Whereas a lot of times, there are a lot of share traders and index traders that just buy. I suppose index traders are a little bit different because they could buy and sell. And certainly futures traders can also sell. But they definitely have a buy bias that you don't necessarily have to have as a currency trader. The leverage thing too, if you haven't traded futures before, that can be a bit tricky to get your head around. And it was for me. Like I remember when I was first getting into, getting out of share trading and getting into this, I had to talk to a futures broker like on the phone, and he was like sending me stuff so that I could understand, what is this margin thing and all that. And we had actually, traded shares on margin. We were able to do that, but it wasn't to the level that you get in Forex or in futures. Obviously, it was and I have no idea what the margin requirements are now in shares, but we couldn't get that much, and you have to pay interest and all that,
I remember I had a small futures account once, and I only could take one trade at a time.
Yeah. And that's why some of the Ryan Jones method of fixed ratio trading, like that's where that comes from, because it's like the question was, how do we grow our account quickly when we can only trade, you know what I mean? Like you're kind of you're stuck with these fixed lot sizes.
Trades.
Yeah. So that's where all that stuff comes from, is from that sort of approach. It's really lucky, I think, and fortunate if you're a currency trader that you can get fine lot distinctions and you can get smaller lot sizes, because that makes a big difference over time. Of course, if you map it out, you can see that it makes a huge difference over time if you're able to get precisely 2% risk or precisely 1.5% risk or whatever your risk amount is. It's a bigger deal for sure, because future traders can't do that, obviously, especially with smaller accounts.
Yeah, totally. I think if you look at the mechanics of the different markets too, when you dig into it, like the stock market, like if you have a retirement account, you can only go long, right? Stuff like that. And then you have the pattern day trader rule, which really kind of limits people. And if you want to go short, then you have to be able to borrow the shares, which means you have to find it somewhere. And then same thing with like the futures markets, where it can get locked, limit out, limit down. So there's all kinds of different mechanics behind it. Whereas the futures market, the Forex market is pretty wide open. You can go long and short pretty easily both ways.
Yes, and outside of the States, you can trade CFDs, contracts for difference, which is like in the UK and Australia, we have these where it's like the major shares like, Tesla or Apple or whatever, you can trade like, it's actually the same as Forex really, where you're trading like a mirror of the market. So, in Forex, we're trading these charts that aren't, our broker passes the trade through to the real currency market, the real interbank currency market. And it's the same thing with these CFDs. So you can actually trade smaller lot sizes and stuff with like Tesla or Apple or, the big shares that are traded like Microsoft and stuff like that. So so that's another thing that you can do if you move over to sort of like the Forex world. It takes a bit, I think, of mental flexibility once you go over to currency trading. I understand people say it's harder, but it depends on what you consider to be harder. Like, I think it's harder to trade really gappy charts. Yeah. That's really the main reason why I like currency. I really do. I mean, it used to be like probably like most people, because you like to have charts going like after work or whatever, so you can trade, when you get home or early in the morning before you go to work or something like that. The thing that I really hate is having a trade on and then the market gaps over, your stop or your price or whatever, you know what I mean? Like that, all that stuff, to me, that is a lot of risk there. Now, I understand currencies definitely do gap as well. The technical analysis side of trading is so much easier when you have these really smooth charts, which you typically get, these candles that you get in Forex. And that's what I really like about it, to be honest. Like, I've looked at Australian companies Australian shares, and they're so gappy. And the market's only open here for like 4 hours or something. It's crazy. And so you get these massive gaps, and it just, you know what it looks like? It looks like target practice. It looks like someone just took a gun and just shot it like you're like, whoa. So it opened here today, and then tomorrow it opens up here. It's crazy, you know? Like, so I really like the smooth charts that you get in currencies. And that, to me, that's another thing that I think, you know, might be weird if you're coming over from shares and you're so used to that. Yeah, it just depends. With anything, though, a practice is what it's going to take. And, you know, working through a simulator, getting your feet wet, getting your confidence up, all the sort of fundamentals of trading, that's the way to go for sure.
Yeah, well, backtesting is really tough with shares too, right? You need so many data sets. It's kind of crazy.
Yeah, you need a lot of data. That's right. Yeah, that's right. Actually, one of the guys in the forum, he was showing me one that I didn't even hear about, but he uses this in his share trading, and it looks very similar to Forex Tester. But you're right. I mean, your data has to be really good no matter what if you want to get some good idea of how your strategies are going to work, for sure.
Yeah. All right, cool. Thanks, Walter.
Okay. See you.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I know of a couple of ladies who can double or triple their account in like 2 or 3 months, but both of them said that I can only work with a $10,000 account.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So, hey, Hugh, I was talking to a trader in my forum, and she was talking about how she kind of gets into this rhythm where she does really, really well in her trading, and in her live account, she kills it basically. But then inevitably she has like this terrible drop off in performance. And she was wondering, like, if, you know, why does this happen? And I think she's onto the right thing, because obviously it could be many things, but two that come to mind would be just a, you know, reversion to the mean, right? So you've been doing really well, but if you have a 50% win rate and you have 8 winning trades in a row, maybe you are going to have a few losers, you know, 4 or 5 losers in a row. But actually, I think what's going on with her, and I think she's identified this, it's really coming down to confidence and overconfidence. So you know how they say, like with athletes, if they're on a win streak and they're just really hot, you know, and this team's getting really hot going into the playoffs, they're so hard to beat. It's kind of like that with trading. But the problem is, because so much of your success in trading comes down to how well you execute and how well you prepare yourself to execute, which is really what this podcast is about, isn't it? It's about that aspect of trading. I suggested to her that she really focus in on how well she is doing that. So, in other words, it's so tempting for us to blame the strategy or the markets when we are, in fact, the reason why we end up with these really difficult losing streaks. So what I told her is, this should be something that you can track. This should be a data point. You should have data points in your journal that are telling you how well are you taking your trades at the beginning, and how well you're managing them, and how well you're getting out of your trades, right? So if you have those data, then you can go back and look and say, okay, well, it looks like every time I start to get really good and have lots of, you know, get really lucky and have a win streak, I started to get sloppy, and I start to consider trades that I wouldn't normally consider. But because I'm feeling so invincible, I take these sort of subpar pattern setups or something like that. And so that's really, I think, one of the key things to look at. It could, of course, be normal reversion to the mean, but in some cases, and I think in her case, she was right to suggest this, or to ask this, is, you know, it could be performance related. So that means keeping a track, so screenshots of your entry, screenshots of your exit, and also keeping a track of what do you think about this entry trade? Like, how good does this look at inception, at the beginning of the trade? And then how good does it look at the end of the trade? Like, how well did you get out of that according to your rules? So it's all according to your rules. So that's one way that you can fight this, is by you can also keep in your journal, like, how confident are you in your trading? So you kind of ask yourself this every day or every time you take a trade, like, how confident are you in your trading right now? You know, on a scale of 1 to 10 or whatever, and you can track it over time. And what you can see is you can map that onto your equity curve and see if your confidence goes up and then your equity curve goes down. You know what I mean? Like that's sort of a precursor to drawdowns, which again would indicate that it's performance related and not anything to do with the markets or the strategy.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, that's true. Totally true. Well, this could go either way. Like, you could use this as an excuse, or you could use it, or it could be a valid reason, right? But some people have this circuit breaker where they think they don't deserve success or whatever, and then they kind of just sabotage it. On one hand, some people blame that for their losses, but in reality, like you said, they're not tracking their stuff, so they don't know if that's the case or not. They're just trying to blame it on something. I think in some cases there are legitimately people who kind of say, "Oh no, I'm successful. What am I going to do?" Right, and then they kind of just sabotage it, maybe subconsciously. But I think that's another thing to look at. Yeah,
and it could be both, right? It could be exactly what you're saying, and then that sort of manifests in the, in the execution. And so, so there are some, you can go to a hypnotherapist and ask them to find out what you think about your trading. They can kind of probe and things like that. Or you can do what's called remote association. So you can write down, you could literally go to a thesaurus, an online thesaurus, and copy all the words that mean wealthy or successful, all those synonyms. You could copy all those, paste them down in a column, right? And then print that out. And then what you can do is you can just go, calm yourself down, get really relaxed, deep breathing and stuff. And then bring that sheet of paper out. And after you look at every word, write down the first thing that comes to your mind on the other side of it. So wealthy, you write down whatever comes to mind. Rich, you write that down. Successful, millionaire, all that stuff. You write down all of your thoughts. And then see if you see a pattern. If you're writing down all these really negative adjectives to those words, right, to those synonyms, that's telling you something about what's going on up here and why maybe you have this repeating pattern. I know traders where they pull out their money. Once they hit 100 grand, they pull it all out and they start over at 10 grand, just work it up and just keep doing that because they self-sabotage when they're trading $500,000 accounts. So I'm not saying that you have to do that. That's a workaround. I think you're actually better off, working on the root of the problem, right?
Yeah.
But at least you know what's going on. There's actually a fascinating interview in the Market Wizards or the New Market Wizards. It's the last one, and it's with the hypnotherapist, and he talks about this client he had where he hypnotized him, and he found out that he kept taking his statements from his broker and he would hide them from his wife or whatever.
Oh yeah, I remember that one. Yeah.
Yeah, do you remember that? So that's an example of that,
Yeah.
Maybe we can link up. I can link up that book, and it's the last chapter. I can't remember which book it is, but yeah. So those are definitely some things that I think much more common than we recognize, for sure. Yeah.
It's really interesting. I know of a couple of ladies who can double or triple their account in 2 or 3 months, but both of them said that I can only work with a $10,000 account. At the next month, I'm going to pull out everything that's the profit and then start all over again. My buddy actually got one of those ladies, I think it was $500,000 to trade or something. And then she couldn't do it. She almost blew it out, and she came back, but then the investor pulled out. So it's a really interesting psychology.
And the dynamic between trader and investor is interesting too, because a lot of times the investor is not educated in terms of what, they don't know what the likelihood, the likely drawdowns are and all that stuff. That's not, you know what I mean?
Yeah.
It's actually really hard to be a trader and have an investor who knows a little bit about trading. That's a really difficult thing. So people who get into that, I always say you need to have an agreement that says the money is tied up for this amount of time.
Yeah.
But there's also triggers. If the drawdown goes to this level, then all bets are off. You can pull your money. You know what I mean? Safeguards on both sides.
Yeah.
Yeah. So, It's a really tricky thing to do that. And in my experience, the traders or the investors who have the least amount of, like the lowest amount of money, are the biggest headaches.
Yeah.
You know what I mean? It's the guy that gives you $5,000 that you got to worry about, not not the guy that has 500 grand. It's so fun. It's so true. It is so
exactly.
True.
And I think a lot of these like prop firms, they kind of set a lot of traders up for failure because, you know, their drawdown is like 10%. Well, how much money are you going to make with the 10% drawdown, right? So it's really tough. And then they only give you like $5,000 to trade with. So I don't know. That's kind of a tough business too.
Yeah, absolutely. Absolutely. Yeah.
All right. Thanks, Walter.
Thanks. See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A lot of traders think that automated trading is the be all and end all, and it's your way out of psychological torture as a trader.
Yeah.
That's not true.
Yeah,
right?
exactly.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, this is something that came up recently this week. It's around like mechanical backtesting or, you know, automated strategies. What's kind of the psychology you go through when you test something that's automated? It can be difficult for the average trader to get an EA or some sort of a program, stick it in, they test 3 or 4 pairs and it doesn't work, right? So where would you take it from there?
Okay, so probably I would recommend that people who are into this, there's a couple of books. One is by Kevin Davey, and the other one, I don't think it's Stidham, but it's another guy. I'll put the links in the show notes. Mm-hmm. So here's the deal with that. Like, you really need to group your data into 2 sets. One set is the set that you're going to test on and make sure that your strategy works, right? Like, which is what you were just talking about. Mm-hmm. The other set, which is the out of set data that you're going to use to take that system that you've developed and see if it actually works, right? Mm-hmm. So in one sense, you're like let's say you have like some moving averages and, you know, Bollinger Bands and RSI. And so you're kind of optimizing the levels and the values and all that on one set of data. Now what you need to do is take that data, and the out of sample data is where you actually run the strategy to see if it works, right? Mm-hmm. So that's really important, because a lot of times what people will do is they will take, like if they have 60 months of data, they will take like 55 months, develop the strategy, and then take 5 months and actually test it. You don't want to do that. You're actually better off in the reverse, having a little chunk of time or data to develop the strategy, and then more to actually see if it actually works. You know what I mean? Mm-hmm. And that's why I'm a real big believer in simple strategies that don't have a lot of degrees of freedom. So degrees of freedom just means the availability of different settings, different levels, right? Mm-hmm. So a moving average has tons of degrees of freedom, right? So so if in that case, what you said, which is if I had a strategy and I tested on it and it didn't work, you should probably throw it away. Right. Mm-hmm. That would be the thing to do. But in most cases, what people do is they'll go back and they'll say, well, what if I had done this? Okay, what's happening now is you're over optimizing that data set immediately. As soon as you did that, as soon as you said, okay, I'm going to use this indicator or this pattern or whatever it is on this set of data, and it didn't work, that's like throw it away, and you should like start with something completely different. Because the more you go back on that set of data and try and make it work, the more what you're doing is fitting that strategy to work on that particular set of data. You know what I mean? That time period in the markets. And that will come out when you take that data and then you apply that system that you used, that you developed on that set of data, and then apply it on the out of sample data. So that's the real problem. So probably the biggest thing I think is understanding that the relationship between the data that you use to develop your strategy and the data that you use to test your strategy. The other thing is, a lot of traders think that automated trading is the be all and end all, and it's your way out of psychological torture as a trader. Yeah. That's not true.
Yeah, right? Exactly.
Yeah, that is not true. It is not true, because you still have to turn it on and you have to turn it off. you have to say, oh no, we're in a GFC or we're in a pandemic, so that means I shouldn't trade my strategy anymore, right? Or I should reduce my risk. And basically what you're doing is you're making up rules on the fly, okay? Because you didn't have any contingencies for that when you develop your strategy. So thinking that letting the computer make the choices for you is going to help you avoid, the psychological pitfalls of trading is, I think, wrong. And I don't think that's true at all. Unfortunately, a lot of us fall victim to that. Now, I will admit that I do like to use automation on the exits. I found this to be very freeing. If you're using like a trailing exit or something that you don't want to check every, for me, like I don't want to check every 6 hour or 8 hour candle or whatever. So I can do that, right? I can set a target and I can set my automated EA exit to get me out. So that's really cool, I think, to do that. There still is a temptation to fiddle with it and all that. But at the end of the day, using automation in your trading is really kind of a test of how developed or evolved you are as a trader, I think. The more confidence you have in your automation, whatever that is, whether it's an exit rule or the complete strategy, that's going to come from your testing, right? From your experience, from getting dirty with the data. And so, like, if you're a beginner and you're starting to get into trading, I think it's the worst thing you can do. I really do. I think you're better off just learning simple strategies and applying them manually. But I think later on, I think it kind of is like the way that a lot of traders end up looking. If you've been doing this for 10 years, you're certainly going to look for some shortcuts, right? You're going to look for how do I get myself away from the computer sort of thing. So yeah, I can see those two things, the in-sample and out-of-sample testing and the thought that it's going to remove all emotion from your trading. I think those are the two biggies for me. What about you?
That's true. Yeah, I mean, I've never been a big fully automated person either, but I can see where either automating the entry or the exit could be a good way to go and just kind of save yourself some time. My trading buddy likes to automate his entries so that the stop gets moved automatically, but he manages the exit, and so you automate the exit. So I can see it helping there. But I think like the idea of testing or having a fully automated system is not for everybody. I think the psychology behind that and the technical mindset behind that, I think, is really hard to get your head around. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And to be honest, like, I think people overcomplicate it, kind of on the degrees of freedom thing. Like, I'm serious. Like, I've seen some really good strategies, and you know what they are? They're things like, buy the pound at 3:00 every day. Like, it's like simple stuff like that. And you're like, what? That would never work, or buy when the market or sell when the market makes 3 candles in a row where it closes higher than the previous candle. You know what I mean? Like, it's kind of like a counter trend move or whatever. Like there's so many really, like, you look at the rules of the code and you're just like, no way, man, there's no way that's going to work. But it does. And so that's another thing to keep in mind. I think as beginners, we start and I was the same way. Dude, when I first, we had, my friend and I, my trading buddy, we had a spreadsheet with 15 different things, different indicator levels that we look at, and I would actually tick on the spreadsheet yes, no, yes, no. And if I had 12 of the 15 in the right direction, I would take the trade. That's what I did. And that was on the 3-minute charts. You know what would happen? By the time I went through all 15 things, the 3-minute candle would already print. You know what I mean? Like, it was crazy.
Yeah. I think we've all been down that route though, right? With the checklist and everything.
Yeah, totally. Yeah, it was so funny. Yeah. That was pretty classic. Yeah.
Cool. Well, thanks for the insights.
All right. Thanks. See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I'm sure, people look back 1,000 years from now on us and they'll say, yeah, they didn't have that quite right.
They were using all these drugs. And
yeah, exactly. There'll be something. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter. All right. This might be a little bit out there for a topic, but I'd be interested to hear what you think about the mind versus the brain. So is there like is everything coming from the physical brain, or do you think that there's some other knowledge out there that maybe we receive through the brain to make our decisions?
This is really good. Thanks. And I'm sure you have some interesting thoughts on this too. I'm sure of it.
Hey there. I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So the way I look at science is it's really materialism. So if you talk to scientists, in essence, most scientists, not all, but most scientists in a professional sense, they are in the field of materialism. And that's kind of the way that our science has gone down this path of, if you can touch it, if you can see it, if you can hold it, if you can measure it, then it's real. And everything else is not. Okay. Mm-hmm. Now that hasn't always been the case, but it certainly has been the case the last 150 years or so in our scientific fields, right? Mm-hmm. So if you talk to a lot of neuroscientists, many of them, not all of them, but many of them will tell you, just like how we map the gene, like the genome, like the human DNA, like when we map that out, it's like, okay, they thought, okay, we're gonna figure out all disease, because of course all disease is due to our genes, right? Which we found out it's not quite the case. Certainly is there's epigenetics, the interaction between your genes and the environment. A lot of hardcore neuroscientists will tell you that if they map out the brain completely, they're not there yet, they don't know exactly what every little nook and cranny of the brain does. They have a general idea of Broca's area, and this is where your emotions, and this is where your frontal lobes is where you do your planning and speech and listening, and they have that, that's all. But they don't know exactly down to the neuron sort of where things are, right? But they do with DNA. And so some of them will tell you that as soon as we get to that point where we map out the entire brain, then we will know everything there is that you need to know about the brain, and you will know the mind. However, there are a lot of other scientists that believe that the mind is separate from the brain. I had whole classes in this in graduate school because I actually had some pretty cool professors who were kind of deep into this philosophical aspect of brain science, right? Cool. So it's really kind of cool. And so my belief is that the brain is like an antenna, okay? And so your mind is beyond the physical, kind of like a sailboat. So if you're in a sailboat, in fact, you might, it's not a very good day today, but you might see some sailboats behind me. I'm not sure if you can. There's one. I don't know if you can see it. But anyway, these sailboats go by, and what they have is they have this big sail that catches the wind. Okay, and the wind helps them go. Obviously, they need to get that sail just right to catch the wind. Mm-hmm. Well, it's the same thing with our brain, right? Our brain is like a sail, right? In essence, what we're doing, our mind is beyond our brain, as I see it. It's beyond us. It's beyond the physical. So the essence of who you are comes from all those experiences that have come in through your brain, and all those physical, all that physical stuff, all those interactions, your memories, the things you've forgotten, all that stuff kind of helps form that, but it's a bit beyond. So you can that's why, for example, and I don't know, this is probably going to freak some people out, but there's a book written in 2004, and I will put it in the show notes. Her name is Sylvia Browne. I don't know if you heard of Sylvia Browne. You heard of her?
Yeah, I've heard of her.
She's a psychic, right? Yeah, she's a psychic. I always thought she was a total and complete fraud. Okay?
Yeah.
Maybe she still is. But what if I told you that she wrote back in 2004 about this virus that would come in the year 2020? Mm-hmm. And she basically made all these predictions in this book. And she was talking about this virus, and she pretty much nailed it. Okay. Mm-hmm. So, and it's just like people who use remote viewing and things like that, where they pick up on other areas of the planet where they're not physically located. How is that possible, right? So I believe that our brains can serve as a bit of an antenna, and I think of the mind as that aspect of, or that ability of you as a human to tap into other things other than what's in the physical stored in your neurons, right? So what are your thoughts? Because I know you probably have some really good ideas along these lines.
Yeah, no, I totally agree. I've been researching it quite a bit, and I've been looking for this book. The name is escaping me, but the guy basically, he's done a lot of studies, and he's proven that there is like a certain knowledge that sits outside of the body, and if you get into this alpha state, you can actually access that knowledge. I don't remember what it was, but I'll put it in the notes when I remember. And yeah,
is it a new book? Is that a new one or an older one?
No, it's older. It's older. I forget the name. Jeez. Anyway, but yeah, I've read several books like that, and then there's that other one, The Secret Life of Plants, right? And it shows that plants actually have a, they can tell when they're going to be harmed. So when you think about, only eating plants versus animals, there's kind of no real difference, right? And once you have that sort of knowledge of what's out there, then you can I think it makes it easier to understand, okay, there are some other things out there that we don't typically learn about or know about, and can be accessed, from outside of us. And it's not just the brain that creates these ideas or these thoughts. And if you go through a lot of famous people, like composers and artists and all these kind of stuff, a lot of them say that I was just the conduit. I did not think of this. Somehow it just came through me, and I just moved my hand, and I wrote this book, or I painted this painting, or I created this opera, or whatever it was. So yeah, I believe that there is a certain amount of information out there. And like you said, I think, our brain is just kind of this antenna. It stores a little bit of information about our life right now, and it helps us like brush our teeth and stuff. But other than that, I think, there is the potential to get access to this other knowledge.
Yeah, so Carl Jung talked about that. I don't know a lot about Carl Jung. I wasn't really big into him, but some people were. He was a student of Freud. So he talked about like the collective consciousness.
Yeah.
So everyone sort of has this collective, like, deep in your unconscious, like the shared experience. And actually, my understanding is that there's data that comes from the mother. Like, so let's say your mother really loved Doritos, okay? Or had some trauma at a young age, like a really terrible experience when she was 5, that actually gets passed on to her children, like encoded somehow. Like that like all that stuff is really weird. That's only kind of recent stuff that we found. And so, yeah, there's a lot more to it. And whenever someone says, like, when you start saying stuff like this, Hugh, and people say like, oh, well, that's ridiculous, or that's not real, or whatever, I always just come back with, well, bloodletting. We used to think that bloodletting was the thing to do. You know what I mean? Like
leeches.
Exactly. Like, it's so easy to think that where we are, we're at the tip of the spear. We're at the we're at the point of science where we have everything, or we almost have all the knowledge and everything. But you always look back in historic time, look back years and years and go, oh, they had bloodletting, they're a bit off there, and I'm sure, people look back 1,000 years from now on us and they'll say, yeah, they didn't have that quite right.
They were using all these drugs and
yeah, exactly. There'll be something. There'll be some clear direction that we sort of went down, and it was the wrong path. It was a dead end.
Yeah. Well, there's a lot of evidence that they're coming up with, like in Turkey and stuff, where they're unearthing these ancient civilizations, right? And they had plumbing, and they had supposedly electricity and all this stuff. So that just shows you that we might not be the tip of the top of the mountain, or whatever you want to call it, right? Yeah. We're not the highest point of civilization. So
yeah, Göbekli Tepe. Yeah, exactly. Göbekli Tepe is a great example of that, because that shouldn't exist back in the Iron Age. Like, they have all that stuff. We weren't supposed to have that in the Iron Age. Nope. I don't know if did you hear about that thing they found in Utah? Like, what the? I mean, that's just weird.
Which one was that?
Just the other day, they found a monolith in Utah. So in the middle of nowhere, okay, these guys were like, I don't know if they were like rangers or foresters or whatever, like they're geologists or something, but they were kind of with the state, trooper dudes or whatever, some official capacity. They're in this helicopter, and one of the dudes is like, what's that? Because they're in this super remote area. Actually, a friend of mine used to work out with the Parks Service in Utah, and he was like, he loved it out by Moab and stuff. I don't know exactly where it was. You can look it up. I'll put it in the show notes for people. But they found this massive metal monolith, like a 12-foot tall monolith, stuck into the rock, just sitting there in the middle of nowhere. And they're like, dude, like what? like what? And so the only theory right now that they're putting forward is that it's some sort of elaborate art installation. Okay, maybe. But that, like, who would helicopter that in? And there's like no seams or anything. Like, you know, like where I live, if they put a bike rack into like the concrete, into like the footpath, the sidewalk, if they put a bike rack in there, there's always like where they had to like drill the hole and they had to kind of like spackle the concrete around there and kind of like seal it up. But this is like, it looks like it just got pushed up out of the ground. It's this pristine metal, shiny. That's how I think how the guy saw it. He was up in the helicopter and he's like, whoa, what's that down there? You know, it's just an example of what you're saying. Like there's these, we don't know everything. Like I don't know where that came from. And maybe it was some elaborate art installation that they somehow hiked into the middle of nowhere and somehow installed like perfectly. It looks like it's cut with lasers or whatever. Like maybe. Yeah, maybe. But it could also be something like historical or something just like there is no real logical explanation for it. And things like that come up all the time. So yeah, I'm totally with you on that one.
Yeah, I mean, they haven't really totally explained the pyramids yet.
Exactly.
It's been like hundreds of years. So like,
yeah. Yeah. No one can do that. No one can do what they did back then. Like we can't do it today with cranes and all that stuff. Yeah.
Yeah, true. All right, cool. Thanks, Walter. Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Make a decision. Like I think the worst thing you can do is kind of just like say, I'm going to take this trade. Am I going to get out? Am I not?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right, Walter, this is something that you probably know about from your studies in psychology. This idea of paradox of indecision. I think they call it like Verdian's ass or something like that, right? Where the donkey is between the food and the water, and he can't make a decision, and then he dies because he doesn't get either one. How do you see that playing out in trading? Like, how do you see that manifest?
Well, I think in trading, our gut instinct is to take the profit and to not wait for. So, if, like, let's say you're in a trade and your trade's in profit, but it hasn't gone as far as you had hoped it would go. Let's say, for example, you risk $1,000 and you want it to go to your $2,000 target. You want to make $2,000 on your $1,000 risk. It's really tempting when it's at $800 for you to go, maybe I should just. It's almost Friday. Maybe I should just take that profit, you know? Mm-hmm. And the problem with that is that it messes up all of your stats. So I think when people are stuck and they're indecisive, the instinct for traders, for us, is to do the wrong thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
It's usually to take the profit. It's usually to, put off the pain. So take the profit quickly, or take the nice feeling thing quickly, and to put off the thing like the losing trade, move the stop away, move it further so I don't get stopped out yet, give it more room. Like those sorts of things, I think in traders, when really it's interesting that some of the most successful traders, what they've done instead is they learn to adapt and interpret the market information and feedback that they get differently to most traders. So, for example, trading with really low win rates strategies, or not taking a lot of trades and having a lot of restraint. You know what I mean? So it is really easy to get stuck in that situation where you're like, I don't know what to do. But I think the tendency for most of us, at least for me and a lot of traders I've talked to, especially when you first start trading, is to do the wrong thing. So to take that quick profit, to put off that painful loss, all those sorts of things are kind of like what we're built to do. And it's why the markets, it's classic. Like I was just reading the other day about this hedge fund, and this hedge fund had been bearish for years. Okay. They had been banking on a market collapse. And interesting thing about it was this year, they had finally decided, you know what? No, we're going to go long. We're going to go long the markets. We're not short anymore. And then March 2020 happened, and with the coronavirus freak out, and of course the markets all went down. And so they literally decided to flip right at the point. You know what I mean? Everything turned around. And it's so amazing how we are so good at that as people, at picking the exact turning point and deciding, you know what? Maybe I'm doing the wrong thing here. Maybe I should do this instead. And it's always, right around the point where you should actually not do that. And I think that kind of that's the story of the markets. That's why it's so difficult for a lot of people to make this work, is because you're just built to go against it, including, that being indecisive or deciding to do sort of the, the wrong thing mathematically. Financial, what are they called? Behavioral economics. Like, they say that we should be very rational and make the rational decision and the one that makes the most money and all that, but we don't do that. The data is pretty clear on that. I believe that we don't do that we don't make those decisions that are most rational. And so instead, we have these driving things, like the drive to be right. The drive to be right is to take profit quickly. The drive to avoid losses and say that you're incorrect. Both of those are kind of the same thing. It's like, you don't want to take the loss, and you also don't want to say that, I made the wrong decision here. All that stuff. So it's a tricky thing. What are your thoughts?
Yeah, for sure. People, I think also it's worth mentioning that you should make a decision. I think the worst thing you can do is kind of just say, I'm going to take this trade. Am I going to get out? Am I going to not? And make a decision. Whatever you think is the right thing, just make the decision. And then number 2, record it. If you can do those 2 things, I think you'll learn much faster, because you'll understand, okay, I have a tendency to do this, take profits early, whatever it is. And then I record that in my journal, and I can see that doesn't result in much. But I think a lot of times people get stuck with a decision, and they're like, oh, maybe I should do that, maybe I shouldn't. And then they kind of flip a coin, and you're not really sticking to one path. If you can stick to one path, I think you can understand your logic and how you really feel about the trade. And then that will allow you to either continue on that path if it's working, or take another path if it's not, or whatever.
Yeah, that's a really good point. I learned that lesson. I was reading about a famous surfer, and he was saying how, as the waves get bigger, I don't really surf huge waves or anything, but when I was younger, I did more, I guess. And he was saying that the worst thing you can do in big surf is to be indecisive. You really and it's so true.
Yeah.
Because it's exactly what you're saying. Yeah. Yeah, it's so bad because when you're paddling out, you've got to decide, are you going to try and duck dive under the wave, or are you going to ditch your board? And when you're paddling forward wave, you got to decide, am I on this? Am I definitely going to try and catch this wave? Because what happens sometimes is people get a little bit fearful or whatever, and they pull back, and then they're stuck in the wave, and then they really take a pounding.
Yeah,
all that stuff. Yeah, exactly. So it's the same with trading, and your point about having a record is really good, because then you can learn. You know what I mean? Mm-hmm. You can learn obviously from experience, but it's so much better because we kind of trick ourselves, and we cloud our memories by thinking that we're better than we are, or sometimes worse than we are. But I think for most of us, we think we're better than we are, and so having a record is really clear, because that clarity and keeps you sort of grounded at where you're really at. So that's key. Yeah, for sure.
Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Break the goals down into more achievable, aspects. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I was talking to a trader the other day, or messaging a trader the other day. Well, what he wanted to do was get really aggressive with his trading strategy and use some aggressive risk algorithms. And so we were working through the numbers, and he was trying to figure out, he kept coming back to this point, oh, my system's not good enough. Oh, my system's not good enough. And what I was trying to share with him is that actually your system's pretty good, but what's happening is when we tweak the risk so much and get really hyper aggressive, it's leading to likely drawdowns that are going to freak you out. You know what I mean? I think we confuse as traders this idea of the system's no good when really we put that label on it, when really it's more that the way we're trading this system is making it no good for our appetite for drawdowns. You know what I mean?
Yeah.
Do you know what I'm saying?
Yeah.
Does that make sense? Like, have you ever had that? I've had that happen lots of times.
Oh yeah, for sure. I mean, I think there's also this idea that if you get a result at a certain risk amount, like maybe 0.5% risk, same results are going to scale up if you risk 5%. And it just doesn't work like that. I mean, your drawdowns are going to be more. And like you said, obviously the psychology is going to be different. And sometimes systems just blow up when you increase the risk that much. And I think that's what people need to understand, in addition to, tailoring the drawdown to their personality, right?
Yeah, it's exactly, you know what you reminded me of when you said that? It's exactly like saying, well, if I got from here to Las Vegas in 10 hours at 100 miles an hour, I'll just go 200 miles an hour and I'll get there in 5 hours. You're going to die, right? Like, you're going to die on that 45 mile an hour turn. Like, it's over. So yeah, it's the exact same thing. It's exactly what you said. That's totally it. That's trading, like thinking that everything is completely scalable. And now actually, I learned that lesson really early in terms of strategies, because one of the guys that was sort of getting me into trading and stuff, and like he wanted to work with me and my friend in trading and sort of like bring in investors and stuff. And he was like, is it scalable? That was his main thing. He worked for a broker, so he understood this idea of, is it scalable? Is it scalable? And he kept pounding on this. And I was like, man, what is this guy talking about? But I realized what it was, because some strategies, they really only work at a certain size. You know what I mean? Like, for example, like if you're scalping the euro or whatever for 5 pips, you're actually going to move the market. I mean, you're going to move the Forex market if you have too much size there. You know what I mean?
Yeah.
Like, you actually won't be able to get into all your position. I know people think about this more in terms of stocks and trading shares and that sort of thing. But it's actually, and I saw a really good presentation on this from the guy who founded Owanda. His name was Richard, and he was Richard Olson, and he was I don't think he has anything to do with Owanda anymore, but he sold out his part of it. But he was showing all this data. He had tick data going back to the 80s or something. The biggest takeaway I got from it was, wow, it doesn't take actually that much to move the Forex market. We think of it as this big, massive, and he's like, no, he's like, so if you're trading like 10 lots or something, like 10 standard lots or whatever, that's like enough to actually really push it, And I found that fascinating, that whole idea. Yeah, so this idea of scalable and it just, maps on perfectly. Obviously, that's not the case. And we often confuse whether or not it's the system that we don't like or the risk parameters that we've placed on the strategy, on the system. And that leads to drawdowns that we can no longer withstand. I mean, that's the one thing I try and get across to people, is that psychologically, your biggest issue is going to be dealing with the drawdowns. So you may as well up front go, all right, what is the drawdown I'm willing to withstand, and what is the drawdown I'm willing to draw the line and say, I'm done. And so now you need to do everything possible to avoid that drawdown where you say, oh, I'm done. I can't do this. I can't sit through a 35% drawdown. That's impossible for me to do. I know that, so I'm not going to do it. So you need to know where that is before you ever start trading the strategy. That's the key thing. Yeah.
Yeah, sure. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. And I think one thing that people think of also is that I need to increase my risk, or I need to increase the return because I can't make a living on whatever it is, 1% on $10,000, which is all they have in the account to trade, right? The reality is that maybe you just get an investor and you get more money or whatever it is, but you can always somewhat scale that up. But I think thinking that you only are limited to what's in your account and the return on your system is kind of like, you're kind of throwing away a good system when it could be useful.
Yeah, absolutely. Yeah. And that idea, that 1% that you said, that the first traders that I came across, there was this group in London, and my friend introduced me to them, and they were, what their goal was every week? They had a very, very simple goal. Every week, they just wanted to make 0.75%. That's it. That's all. And some weeks they'd lose 0.5% or whatever, or 1%. But they wanted to average every week 0.75%. That was it. That was their goal. It was just boom, boom, boom. And you would be amazed at how quickly your account grows if you can do that. Even if you can only do 0.5% a week, if you just keep that money in there, and if you're able to compound it and you don't have to pull it out, you'd be amazed at how that can grow. It's it doesn't take that long, actually. So it's going to grow faster there than in the bank, that's for sure. So yeah. So that's the thing, is that sometimes you do have to take a step back and go, okay, well, I'm not going to be super aggressive, so what can I do? And maybe that's what you can do, is just take it, break the goals down into more achievable aspects and more achievable steps.
Yeah, cool. Good advice. All right, thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
But I'm not sure that going to school and getting a PhD or whatever, like I did, is really the best thing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, we've both met quite a few people over the years and quite a few successful people. What are the core traits that you see in successful people and successful traders?
Yeah, that's a good question. It's interesting because I think, the test where it's like I'm an INTJ or EFP, whatever,
Myers-Briggs.
Myers-Briggs, Myers-Briggs. I always get that one confused with the there's another one. But anyway, with the Myers-Briggs, like I've seen on forums and stuff, people discuss like, oh, if you're an INTJ, that's the best trader profile or whatever. And I can see why people go down that way. But actually, I think there's only a few things that would make it easier. So there's a really good study of like really good gamblers, as funny as this sounds. And they actually look, the way that the author described it is, they almost look at as if they're in, like, they live forever. So when they're looking at the odds, they might have a slight odd in a certain situation. For example, like I can't even, like, I don't even know enough about poker or blackjack or whatever, but like in a certain situation with a certain hand in poker or blackjack, your odds shift, all right? Or if certain number of face cards have been pulled out of a blackjack deck, even if it's 6 blackjack decks that are all mixed up together that they're playing, the dealer's playing. Like there's times when it shifts and you get a slight advantage, right? And it's almost like in the study, they almost seem like they just live forever. And so they look at things on a really long time frame. And I think that's one thing I would say that's interesting about the successful traders. They have that ability to kind of see the value of a really slight edge. Whereas I think when we first start trading, we assume that we can't even start trading until we have like this enormous edge, right?
Yeah.
And once we find that, then it's like, it's over. We're just going to mine that sucker. And so I find that fascinating about the gamblers. I think that a lot of that translates to trading. The other big one would be resilience. I think that most traders quit and move on to something else, or just find trading too painful when they're unable to overcome losing streaks. I think that's a big one. I think that's probably the number one reason why most traders don't make it. Not because they don't have a good system, not because they don't have good risk rules in place, but because they were unable to trade through that drawdown. And so they've come up with excuses, whatever they are. The system's broken, the markets have changed, I'm not cut out for this, this is the wrong strategy for negative interest rate environments, whatever. They can come up with lots of reasons why, and they quit. So resilience, I think, is good, and also the ability to see the like to play out the odds in your head. And you can do that obviously with a spreadsheet. You can do that with Forex Tester. All of that's really important. But I think for me, if you're able to see the value And it's really, I guess it's kind of in a way probabilistic thinking would be kind of the overarching general thing. Like, I really think it's important, I was thinking about this the other day, not to go too far on a tangent. I know I want to get your ideas too on this, but I was thinking about kids and what's important for kids to learn. And, and I went to school for a long time, right? But I'm not sure that going to school and getting a PhD or whatever like I did is really the best thing for you. In a lot of ways, it kind of pins you in intellectually into a certain corner, and you almost can't get out of that.
Yeah.
And so I was thinking, like, what were the really good skills that people need to have? And I thought one would be the ability to understand probabilities and statistical thinking. The whole game of science is a game, and it's run on probabilities, basically. Everything. It doesn't matter if it's geology, astronomy, medicine, psychology, it's all a game of science. And so if you can understand probabilities and statistics, you can read all those papers, you can see what everyone's arguing, you can do all that, right? The other thing would be storytelling, because there's a lot of value in that. I'll tell you a quick story. One of my friends, his whole business is getting investors to invest in a fund of Australian properties, right? And he was saying that he had this guy come over from Switzerland, this billionaire guy, and they were trying to get him to invest in his company or whatever. And he's like, all the guy said to me was, tell me the story. My friend was like, I couldn't do it. I didn't know what to say. We had all the numbers and everything, but we didn't have the story. And I think there's a lot to that. Like, I remember in high school sitting on a bus going out to the ski fields. It was like, 3-4 hour trip. One of the guys, he was a year older than me in high school. He was sitting in the bus and he was sitting there telling me stories, and everyone was just riveted. And I remember thinking, that's awesome. Like, that this guy can do that. It's such a cool skill, to be able to tell stories in a way that's engaging and can teach lessons and stuff. So I really think, there's a few other things, like maybe learning how to speak in front of others, but there's certain skills that you can get, and you don't necessarily have to get a master's or a PhD to have those skills. You can learn probabilistic thinking, you can learn storytelling, all those things. You can learn how to speak in public, like, in an engaging, interesting way. And it's fascinating to me how many really good scientists are terrible speakers, and you see that. Like, it's weird to me. Like, you would think if you spend your whole life on this one issue, like this one thing about, whatever it is, anti-aging, or, something about the number of Earth-like planets, in the universe or whatever. Like, if you had some really important thing, you thought this is the most important thing we need to understand, the ozone layer or whatever, you would think that you would spend a little bit of time learning how to explain that to other people. You know what I mean?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So I know it's a long-winded tangent, but for trading specifically, I think it's probabilistic thinking and being resilient, which is the ability to bounce back in the face of really tough times, because that's what traders have to deal with in terms of losing streaks. What are your thoughts?
Yeah, I would totally agree with you on the resilience part. I think it's a lot of these successful business people just stuck with it. And if you just stick with it at some point, if you try to improve, you'll get better, right? And I think that's a huge one, obviously. Also, I think a lot of good business people and traders, I think, are kind of weird, like in terms of what the average person thinks about them, right? It's the idea of having independent thought, thinking for themselves and trying to figure out what really works for me, what really does work in the markets, and not, like you said, falling into the trap of education, like the guy who can quote all the books, but he can't trade to save his life, right? And I think that's a really key one, to be able to think for yourself and to be able to really think way, way, way out of the norm. I think really puts you ahead of most people.
Yeah, and that's such a good point. I've noticed that, like, the difference between people generally speaking in the US versus in Australia is, in Australia we have kind of this really traditional English way of teaching children, not universally, but in a lot of places. And so what that means is, they get grounded in the classics and sort of thing. So they can quote the classics and they can understand certain things that are held high in our Western culture and ideas and authors and stuff like that. In the States, it's exactly what you say. Like, I think there's a lot of value placed on the cowboy, you know, or the Lone Ranger, you know, that sort of idea, the guy who's just out on his own, kind of doing his own thing and, you know, figuring it out on his own, and being an individual is so important. Whereas in Australia, there are a lot of great things, but one of the things I've noticed is that it values being in a group, like the community. It's a very Asian idea of like the good of the community, you know? And that's really important. And one time I remember my friend who was Australian, he was trying to console me because what had happened in California is I had a failed business. And for lots of reasons, but he was saying, oh man, I'd always bet on, which basically what you were just saying. He said, I would always bet on the businessman with the failed business because he'll come good. You know, he understands that he's been through the war stuff. And I was thinking to myself, like, dude, I don't even need you to tell me this. Like, you know what I mean? Like that wasn't even a concern for me. You know what I mean? Like it really wasn't. Like I was like, you know, bummer. You know what I mean? It was a couple of years of my life, or whatever, year and a half or whatever, and a lot of money and work and this and that. But it didn't work out, and I wasn't like worried that, you know, I could never do anything because I had a failed business. You know what I mean? So, but his point was exactly what yours was, which is, you know, you have two people. You have one that's never seen failure and one that's seen failure. Which one do you bet on? He's like, I would always go with the guy that's been hardened through, you know, the trials of burning through a doomed business or whatever, you know, as a business person, you know, he was saying like that. And I was like, I could appreciate what he was saying, but I didn't need the pep talk. Yeah.
Cool. Yeah, totally. But that brings up the point also, like if somebody thinks that they don't have these characteristics, how can they develop them? And do you think that some people are just destined not to have them?
I think that's in my opinion, and from what I've seen, even in psychology research, they used to kind of think that way, that like, and I've heard older people say this, you know, when your kid's personality is formed before they turn 5 and all that, you know, we found that personality is actually quite malleable. And I've noticed that I've changed in different environments. Like when I was in a certain circle of friends in undergraduate school, I was a certain way. And then when I went to graduate school, I kind of became a different person, had a different group of friends, you know, and the same thing when I left US and came to Australia, you know, I've kind of a different person that, you know, and everyone will say, well, yeah, I'm always different with my grandma than I am with my friends from high school. Okay. Yeah, sure. Right. That's fine. But I'm talking about actually sort of changing your introversion, extroversion, you know, like where you're on the scale. Yeah. And so let's take an example of resilience. We've both identified resilience as being an important thing. So an easy way for that, and there's actually a school in Australia that teaches this way, and a lot of psychologists will as well. So like if you go to like a cognitive behavioral therapist because you're depressed or something, they will teach you this skill. But in terms of trading, let's say that I'm in a losing streak and I'm thinking, oh no, here we go again, another failed strategy. I'm training this strategy, it's failing me, it's not going to do very well, I need to give up, you know, I need to find something better, I need to, you know, reassess, and I'm going to lose all my money, I'm never going to be able to make trading work, I'm never going to be able to quit my job. Like all these things sort of cascade. So what you do is you can build up resilience by rephrasing that self-talk, right? The way that you see things. And so you identify that that's called catastrophizing. Just because I have a losing streak of 6 trades means I'm never going to make it as a trader, right? That's catastrophizing. And it sounds ridiculous when you and I talk about it right now. But actually for a lot of people, that's their reality. Yeah. And so, and I've been there, you've probably been there, where you've had situations, it doesn't have to be trading, it could be anything, where you start thinking, oh my God, like it's never going to work. So that can be retrained, and you can train yourself to say, okay, hang on. All right, so I've been trading this system for how long? 2 months. Okay, 2 months. And I back tested it for how long? 10 years. 10 years. Okay, 10 years. In the 10-year back test, did I ever see a drawdown of 6 trades in a row that were losers? Oh yeah. Okay. So is it really the case that the strategy is busted? No, probably not. Mm-hmm. Is it likely this is a normal drawdown? Yeah, probably. So what you're just trying to do is just trying to inch yourself up a little bit higher to a slightly more positive emotion through logic. And that's all that is. And they do that with depressed people too, with cognitive behavioral therapy. You can look up CBT on the internet and see that. But that's what you can do to build resilience, is you can just learn new tools where you kind of step back and say, is this real, what I'm seeing here? Or Or am I just catastrophizing? Am I just letting my thoughts get really negative and keep going to the point where, you know, I'm just like off the map? Like I'm not even on reality anymore. I'm just in this other world of manufactured pain and suffering, right? So, and it's so easy for us to do that because our ancestors did that. They're the ones that survived. They're the ones that were worried. Wait, what's that noise in the bushes? Oh no, it must be a lemur, you know, or whatever, right? They're the ones that survived. The guys that were just whistling through the woods, they're the ones that were eaten by the lemur, right? So I don't even know if lemurs eat people, but you know what I mean. Yeah. So
Oh, great points. Yeah, for sure. I think another thing too that I found is that motivation really plays a big part in it. Like if you have the proper motivation, you can do almost anything. But if not motivated, you know, you have a nice cushy job, you kind of like it, then you probably won't quit because, you know, trading is tough in the beginning. So I think that's also another thing to consider is how can you maybe not artificially create motivation, but dig up your real motivation behind what you want to do. You know, do you want to travel around, be a trader? Do you want to buy these things that you can't afford right now? Do you want to take care of your kids and see them grow up, stuff like that? And I think that's also a big motivator to, you know, improve whatever you need to improve, no matter how hard it is.
Yeah, that's so true because you will see that in traders, the ones who, like, no matter what, they still push through, and it helps build resilience when you have that end goal and there's nothing else you're going to do except achieve that goal.
Yeah.
So it's a really good point.
Yeah. Cool. All right. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think it's just a matter of repetition.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here. Trader has written and said, you know, I really would like to get to the point where I'm making consistent profits, and yet I'm very fearful of taking a trade. So that's the question. So my thoughts on this, and I'd like to get your thoughts as well, is that when you're at a point of fear, what is fear? It's just anticipating the unknown. Because you don't know what may happen, you are concerned and you might think the worst. Well, what could be the worst possible outcome of a trade? It could be that you lose, or that you lose more than you had anticipated, right? So, I said I'm gonna put my stop loss at $250, but I actually lose, $375 or something like that. So that could be kind of the worst case scenario. The antidote for fear is preparation, and so that means running through your simulator like Forex Tester, doing your back tests, making sure that you know what is likely, what is not likely, looking at all that stuff and mapping it out. Because once you map it out, guess what? It's totally easy. Now you know, right? There's no really unknown. Once you get enough trades under your belt with a strategy, it's really shouldn't be unknown. It should be, well, I have a 61% chance of making profit here, 39% chance of getting stopped out, and around 0.5% of the time, the market may gap over my stop loss, and I'll lose a little bit more than I had anticipated in terms of my risk, right? So that, those are the sorts of situations that, preparation can help you with that. So if I hear from a trader that they're fearful, it probably means that they're not prepared and they don't really know what to expect. So you can help that with back testing. It also probably means that in the past you've had a lot of losing. And why is that? Is that because you're risking too much on your trades? So even a normal loss is really painful. Then you need to look at how what your position sizing is. And if you're just fearful in general of taking a trade, no matter the size, it just means you're not prepared yet. You need to go back. You need to, work through Forex Tester, find out what your numbers are in terms of average win, average loss, win rate, loss rate. You need to figure all that stuff out, what your likelihood of certain drawdowns are. All that stuff can be found just by preparing. So that would be my suggestion to the trader who has the fear of pulling the trigger. You know, it could be that you have done all that and you have a low win rate. Sometimes that'll happen. You've worked it all out, but you have a 29% win rate system. In those cases, I've seen some traders successfully automate that so that the entry is automated so that they don't have to keep hitting the button knowing that, you know, they got a 7 out of 10 chance of losing again, because that can be really that can be a difficult thing to do. So those are the things that I would say about that. What are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, cool. I think what you just said would cover about 90-95% of the fear of losing. But I think there's a small population of traders who also have this fear of just, you know, the system isn't going to translate into live market somehow. And I think those are the very, very risk averse people in life and in trading. So I think to overcome that, another thing to do is just to take some trades, like bring the risk way down and just take trades. And I think that's kind of like ripping off the Band-Aid, right? You just got to go out and do it. Otherwise, you're just in your head saying, oh, is this really going to work? Is this really going to work? And the only way to do it is to actually go and take a trade.
Yeah, and you can do that like over and over again with a small account, right?
Yeah,
so you have your $150 account or whatever. Yeah, just boom, 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 boom. Yeah, that's a great, because then you kind of get, it's like a muscle, you know, you're exercising that muscle. You're taking the trades every day or whatever. And, you know, yeah, sure, you're only risking 25 cents or whatever, but you're doing it. Like you're saying, like you're doing it. And it's totally different when it's real money. All of that is absolutely true. So, yeah.
Yeah, because it's kind of like maybe hunting or skeet shooting, right? Like it might be a little intimidating to shoot a shotgun. But then once you do it a few times and you're like, okay, I can shoot these clay pigeons or whatever. And I think it's just a matter of repetition.
Yeah. Have you ever done that, by the way?
Yeah.
It hurts. Like I did it when I was a kid.
Yeah.
It hurts. It hurts when you have the shotgun here. Like it's like I was just a kid. I don't even know. Maybe I was like 10 years old or something. And I went out.
Yeah.
And it like the kick is crazy.
Yeah. Yeah. But once you can get over it, right? I think you get used to it or whatever. So
yeah. No, man. I only did it once, and I was like I said, I was a kid, and I was like, whoa. Like I wasn't expecting that. I mean, I knew it would be loud, but it was the kick and the thing that where it gets you right here in the chest, the shoulder. You know, it's like ugh. Yeah, it's crazy. Yeah. It's kind of fun though. Like it is kind of fun actually to shoot clay pigeons.
Yeah.
But
like, I'm not into violence, obviously, but you know that.
Yeah,
it is fun.
Yeah, it is pretty fun. Yeah.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Charts are good, and we both like charts, and you know most people trade with that. But what are some other catalysts that you could look at maybe?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from one of our traders, and he is wondering about how should he go about trading and getting to the point where he knows which catalyst he should be using to trade. So he wants to find the right catalyst. And so my thoughts are that inside of this question, if we sort of unpack it, he's basically saying that he needs to know what the right pattern or the right catalyst. So the way I talk about it in Naked Forks is a catalyst is a pattern at a certain support and resistance level. Obviously, you could use trend lines, you could use other things. You don't have to use support and resistance levels, but a lot of traders do, and that's why they kind of become obvious on the charts. So what's interesting is he's kind of suggesting that he needs to find the right catalyst for him, but he doesn't actually come out and say that. He actually says, I need to find the right catalyst. So, because he doesn't say that all catalysts are making money, which one should I use, or which one makes the most money. He just says, I need to find the right one. So really what this comes down to, I think, is discovering what you as a person, like what you think as a trader about the markets. What do you think they're going to do? What do you think they will do? What do you think they're likely to do? That's all up to you, right? That's your, double bottoms and double tops make a lot of sense to some people because they like to find that sort of reversal point. And then trend continuation patterns make sense to other people. Or breakouts make sense to other people. So it really depends on what you look for as a trader. Does that make sense? So what are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode. Yeah, no, totally. I think there's actually kind of two questions in there, right? There's the beginner's question of, he's actually saying, what system should I use, right? And that implies some sort of technical system or whatever. But then if you take it a little bit deeper, it could also mean, what works for me? What kind of catalyst should I be using? And that might not be a chart pattern. Maybe you're trading the cocoa market and you know something about the companies in the cocoa market, and you'll use that as a trading catalyst and not necessarily what's on the chart. So I think a couple of things to consider there. Obviously, charts are good, and we like charts. We both like charts, and most people trade with that. But what are some other catalysts that you could look at? Maybe that's that's more in the futures and stock market, maybe. But FX has some of those types of catalysts. Also, like I know you look at the retail traders, right? Their ratios and stuff like that. So that might be another catalyst that you can look at. So just something to think about there.
Yeah. There's lots of triggers, aren't there? Yeah, for sure. Yeah. So it really, like, I guess I just want people to get away from this idea of like there's a best pattern or whatever. It's really about what matches up with you. Yeah.
Mm-hmm. Yeah. Totally. Yeah.
Yeah. Cool.
Okay. Cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is a big time of change, obviously. This last year and this coming year is going to be probably even more change. So what can people do to kind of weather the change and kind of roll with the punches and even benefit from the situation?
I'll tell you one thing I've learned. I think people sometimes confuse fear as, they give it like a negative. So like, for example, if I grow up in a country like Australia, where predominantly, I noticed this when I came to Australia, that like all the people, when you get off the plane at the airport, like everyone looks like they're all from England. They're all these white faces. And that was so different to me growing up in the United States, in particular in California, where, I had black friends, Mexican friends, you know what I mean? Like I had friends from Taiwan, was a good friend growing up. Lots of friends from Mexico, of course. I had friends from Japan. I had friends, like from, everywhere, Guatemala. I had a really good friend from Guatemala in college. And so, it was like if I took someone out of Australia and dropped them off in the middle of like Angola, where they're going to stick out, right? That can be scary. But why? Why are you scared? Do you like if I just pluck someone out of Sydney airport and I said, okay, we're going to Angola, and I dropped them off in Angola, and they're like, whoa, they would probably be fearful. But why? they don't probably know anything about Angola. Maybe they didn't even know it was a country. Never heard the name. But yet here they are, and they look different, and they're fearful. And I think that's really what gets at the core of fear, is the unknown, right? So we don't know about something, and we have to confront it. So what do we do? And so I think fear, in a way, is like a sign that you're in a spot, you're in a place where it's very exciting. Like it's exciting. Think about it. Most of our lives, what we do is so normalized. And so, you get on the bus at the same time, or you get in your car at the same time, you go to work at the same time, you go to the same cafe, you have lunch with the same people, or what, you know what I mean? Like so much of it. And I know like it's not always the case for everyone. Like you might have a meeting over here or a meeting over there, or you might have a business trip or whatever. But the point is, most of what we do is just so normal. So when you're fearful, to me, that's like a sign that you're alive and that the unknown is there. And that should be exciting. So really, I think we misinterpret excitement over the unknown as fear.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Because we don't know what's going to happen. We like it when we know what's going to happen. We know what is likely to happen. So I've learned, and I think this really applies to trading. In fact, one of the things FX Street was asking me about this like a couple years ago. What do like I think it was New Year's resolutions, and they asked a bunch of people on there, and I said, because I do webinars there, like I just do once a month now. But and they said, what are you working on in the new year? And I said, I really wanted to work on this idea of fear and of embracing the unknown, because that's what we do as traders, right? You and I, we risk our money, we put it down, and we say, I don't know what's going to happen here, but I believe enough in my data, in my testing, have enough confidence behind it that I'm going to risk my money because I think there's a good chance that X is going to happen and X is good for me, right? Yeah. And so I think fear, you can kind of twist it in your head and look at it, flip it around, look at it as an excitement for what's to come, the unknown that's to come. And that can be another opportunity to learn something. That could be another opportunity to see something about yourself that you hadn't seen, like a facet of yourself, whatever. So that's why I think we should sort of reorganize how we view fear as something exciting, not as something so problematic or, dark or, negative. Yeah. But rather interpret it as something, it's really kind of excitement. It's excitement that we're interpreting in a negative way. What are your thoughts on that?
Yeah, no, I totally agree. I think that in reality, there aren't too many things that can really harm you. I think, it's just an opportunity to grow. And I think, especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do. And I think if you just calm down and just objectively see the situation and say, okay, this is going to go away, but then maybe this is going to come up, and that's an opportunity, and this is an opportunity to do this, then I think it becomes much more interesting and a lot less scary.
Yeah, and that's why,